Hey everyone! Welcome to Grow Your Acorn, free practical help and advice from Acorn Business Solutions. If you're a small business owner or running a startup in the UK, today's video is for you. We're going to break down the tax implications of forming a UK limited company. We'll cover corporation tax, VAT, payee and national insurance, and dividend tax. So if you're looking to start a business or have just formed a limited company, make sure to watch until the end. Let's kick things off with corporation tax. As a limited company, you're legally required to pay corporation tax on your profits. Currently, the corporation tax rate in the UK is set at 25% for companies with profits over £250,000. However, for smaller companies with profits under £50,000, there's a lower rate of 19%. Keep in mind, corporation tax isn't automatically deducted. You'll need to calculate and report your taxable profits by filing a company tax return with HMRC. And yes, it's your responsibility to file it, even if you have no tax to pay. Also, don't forget that some expenses like business travel and office supplies can be deducted before you calculate your taxable profits. So make sure to keep detailed records of your business expenses. Next up, VAT or value-added tax. You only need to register for VAT if your turnover exceeds £90,000 in a 12-month period, but you can register voluntarily. This could be beneficial if you're dealing with VAT-registered businesses and want to claim back VAT on purchases. Once you're VAT registered, you'll have to charge VAT on most goods and services you sell. There are different rates. 20% is the standard rate, but some items might qualify for reduced rates like 5% or even be zero rated. Be sure to keep track of all VAT charged and paid because you'll need to submit VAT returns, usually on a quarterly basis. Now, let's talk about your responsibilities as an employer if you have employees or if you're paying yourself a salary as a director. Payee or pay-as-you-earn is the system HMRC uses to collect income tax and national insurance contributions. As an employer, you'll need to set up a pay system to deduct income tax and national insurance from salaries. You're also responsible for paying employer national insurance contributions, which, as of this year, are at a rate of 13.8% on earnings above £9,100 annually. Don't forget, you'll need to submit regular payee returns to HMRC, usually on a monthly basis. Even if you're the only employee of your company, you'll still need to follow this process if you're taking a salary. So it's essential to stay on top of these calculations to avoid any penalties. Now, let's discuss dividend tax. One of the main perks of forming a limited company is that you can pay yourself through dividends, but dividends come with their own tax responsibilities. Dividends are taxed at different rates depending on your income tax band. The rates are currently 8.75% for basic rate taxpayers, 33.75% for higher rate taxpayers, and 39.35% for additional rate taxpayers. But here's a tip. The first £1,000 of dividends is tax-free thanks to the dividend allowance, so it's a good idea to make the most of that. Dividends are not subject to national insurance, so many directors opt for a combination of a small salary and dividends to be tax efficient. However, this balance needs to be planned carefully, so it's wise to get advice from an accountant. One last thing. Dividends must be paid from profits after corporation tax, so make sure you're aware of how much profit your company has made before declaring a dividend. To wrap up, forming a UK limited company has some significant tax advantages, but also some responsibilities. Here's a quick recap. 1. Corporation tax. Pay 19% or 25% on profits, depending on your company's income. 2. VAT. Register if your turnover exceeds £90,000 and file returns quarterly. 3. Pay and national insurance. Set up pay for yourself and any employees, and pay employer national insurance. 4. Dividend tax. Use dividends to pay yourself, but remember the tax rates and allowances. Make sure you stay on top of these obligations to avoid any penalties. And it's always a good idea to get advice from a professional accountant when managing your company's finances.